All right, welcome back. We got a stock market update. We had a lot going down this week, and let's kick it off with the Fed. So the Fed had their meeting. They did not raise, they did not cut, but they did give the market a little bit more insight to when they would cut. So the market was pricing in rate cuts starting in March, and the Fed said that looks highly unlikely. The reason for that is they still want to make sure that inflation gets down to their goal of 2% and stays there. And they see the employment picture being very strong. So there's no need to start cutting rates because they see the economy is in good shape. And if they cut rates too early, that could reignite inflation. So they're being very cautious to make sure that they beat inflation, and they will cut rates when they see weakness in the economy. So with that being said, the market is now having to reprice higher for longer because the market had the market was jumping the gun expecting rate cuts to happen in March. So we'll have to wait and see. They're data dependent, so we got to see the data. Now, this morning we had a really strong jobs report. It was about double the expectations of jobs added. Now, it is interesting because all last week, all this past month, I was seeing people getting laid off. So it'd be interesting to see, where those jobs are being added. Are they government jobs? I saw last week UPS laid off 12,000 people. Microsoft was laying off some people. So we'll have to wait and see what happens there. But for now, looks like higher for longer. This week, we also had some blowout earnings. Incredible earnings. And we'll look at some of the charts. We'll go over some of that. Everyone hates Elon. We had a judge overturn Elon's pay package that was agreed upon 10 years ago. So that is an interesting story. I highly recommend you look into that. And there'll be more to come from that. I'm sure he's going to appeal, and we'll see what else comes from that circus. We're still watching the yield curve. Real quick, the yield curve is now going back down. So we've been here before where we get close to uninverting and then we go back down. So we're keeping an eye there. Let's take a look at some charts. The 10-year yield, again, this morning, really strong jobs report shot the yields up. So this is a huge move. 3.66% increase. That's a big move up. And you can see we've just been chugging down, 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 down. So we'll see if there's more follow through here. The rates start increasing again because the expectation of rate cuts is now going to be pushed out even further. So that'll be interesting to see. And we'll take a look at some of the earnings movers. So Amazon killed it. They're just doing really, really well. 169 billion in revenue in a quarter, which is really good. And it was their holiday quarter, so it's their strongest quarter. But what's really important here and why the stock is ripping is because they're becoming more efficient. So Amazon has hardly been profitable. They're barely making any profit. They make a ton of revenue, but they reinvest that back into the business. But I think I have it in here. Let's go look at the bull and bear case for Amazon, because they're just a phenomenal business, and it's great to see. Amazon's my second largest position. So while Tesla's in the dumps, it's nice to see Amazon performing really well. So let's look at the pros. AWS killing it. Ecom growth killing it. Advertising doing really, really well. I don't know about you, but half the time I look up something specific on Amazon, I do end up buying the promoted product. Now, I don't know if that's just because it's shoved in my face, but it tends to be that the promoted product is actually the one that I want. So companies are paying to have their product put up there. That's big revenue that they're starting to get. the shift of profitability, I believe their profitability increased over 240% this quarter. So that's great because there's so much fat for them to trim. They make so much money and there's so much fat for them to trim. When they do that, they're going to have so much cash, and who knows how they're going to either reinvest that, pay a dividend, buybacks, who knows, but they're going to have so much cash to play with, and Wall Street likes that. That's why the stock's moving up. Incredible revenue. Their AI chips, they're not coming, they're here. So they talked about that on the earnings call, and I think that's going to be another big growth driver for them when it comes to the data center and things like that. They're making their own chips, and that's going to save them a lot of money, and it'll be interesting to see how that continues to evolve. The cons, lack of profitability, that's improving. Valuation, it's not the cheapest, but it's getting cheaper, so that's great. And the cost of sales is high, but it's always going to be that way. That's just the type of business that they run. And let's take a look here at the income statement. Let me move my head. AWS, 24 billion. 7 of that is profit. You've got all these other businesses. They have Twitch. They have they've got Audible. They've got Whole Foods. So there's many businesses within businesses. And on their earnings call, they did talk a lot about their medical side. And they're looking at physical pharmacies. They purchased One Medical, which is like a telemedicine company. So I think that's going to be another big growth part of their business. But again, you see advertising, 15 billion, and then 70 billion from their online store. So doing great, 10 billion profit, looking really, really solid here. So I'm really happy for that, and I think this is just the beginning. When we look at their chart, if we zoom out here, I've been telling people that I think Amazon is a sleeping giant because it's a giant company. Everyone knows it. It's in our face, but the stock hasn't done diddly squat since 2020, right? It had a huge run up from 2020. Speaking of Amazon, the truck is pulling up right now. So it's moved up, had a huge pandemic bump, and it was just chopping sideways. We had the pullback, and now we're getting back here. Wouldn't surprise me if we blow through this red line within this year, and now we're in discovery mode. So great business. There's a reason when I was in Seattle, last year I walked around their headquarters, and they got a really cool headquarters. That's my screensaver. Has been and will be for the next couple years. So love the company, love the business, did great. We also had Microsoft. Microsoft killed it as well. I mean, look at this chart, doing great. And then the big mover, the big winner, winner, chicken dinner, Microsoft. Kind of funny, one day Zuckerberg is getting yelled at by Congress. The next day, his net worth just increased by 26 billion, something like that. But for Facebook, for Meta, to increase 20% in one day, I believe that was around 200 billion in market cap added to this company. Pretty unbelievable. I haven't listened to their earnings call yet. You even got NVDA, unreal. NVIDIA another 5% today. So these tech companies are killing it. Meanwhile, you got a Tesla, you've got an NVDA, not looking so good. So the chips, semis, doing great. The semis, they have these little pullbacks, and then they just get violently bought up right here. I had this line, ready to buy. I did not. But we'll get another crack at it. So let's go back to, that's the crypto stuff. Let's go back to the market news. We've gone over all that. When it comes to the shopping list, I'm looking to scoop up some Tesla. I'm looking to nibble there. I bought a little bit from one of my accounts just to get a full position that I wanted there, but I'm looking to add some more. I don't know if that'll be next week or coming up, but I'm looking to buy some more Tesla, and I'm also looking to buy some VICI. Other than that, I'm waiting for Enphase's earnings call, and in one of my accounts, I need a few more shares of Amazon. So if we can get a little pullback, some profit taking, I will look to finish that position there. Other than that, Watchlist is the same. I'm not doing anything here. I'm focused on these guys first. But I think the big news of the week is repricing higher for longer. When we look at our opportunities, the semis are ripping. Mag 7 is ripping. So I need some pain for myself to allocate more to those positions. But what's really nice right now is last year I spent a lot of time buying Amazon and I didn't really buy much Tesla. So this is kind of perfect scenario here where let Amazon rip and let me accumulate some more Tesla and see where we go from there. So the big thing I'm looking to purchase is interest rate sensitive stocks. So what stocks are going to continue to be punished because of higher interest rates? And that's Tesla, Enphase, REITs, maybe some financial stuff, but that's not my jam. So that's why I took off small caps, because a lot of the small caps are the regional banks and things like that. Not my jam, but if that's something that you like, worth looking at. I will be looking at bonds again, and when I say bonds, I mean the TLT. There might be another trade there, especially if rates start to climb back up. ETFs, the semis, that's the big one I'm looking at, SMH and the Qs. But I want a little pullback. There was a good opportunity this week. Remember, this is going to be a year of just chop city. You're going to have, I think this week we had a 2% down day and a 2% up day. So there's a lot of volatility here in the market. So yeah, we had a big move down and then just shot back up out of that. So when we have those big red days, take advantage of the things that are really bleeding. But Mag 7 on a dip, I don't know if we'll get a dip. Same with the semis. We need to see a dip. Maybe on NVDA earnings, maybe they disappoint. But next week, I probably will do a little bit of purchasing in those interest rate sensitive stocks. I don't know when Enphase reports, but they creeped back down under 100. They closed above. But this, it's in the green box, which is where I'd like to purchase. But I'm waiting for their earnings. I want to hear what they have to say, what their outlook looks like, which we'll get that next week. So that's all I got for you this week. Portfolio should be looking good. 401k should be looking good. And if you're like me and like a deal, there's some deals out there and some great stocks. But you may have to wait a while. Like I said in my Tesla update, here's my squiggles. Now, this is just some dude drawing lines on some chart. But I don't expect this to bounce anytime soon. I'm prepared for more pain or just flat. But that's totally fine with me, because Tesla for me is not a 1 day, 1 week, 1 month story. I'll be holding this thing for a long time. So that's all I got for you. Stock market update. Have a great weekend. Peace out. Look at the sun hit me in the face. Love it. Peace out.